commentary for the first week of June 2025, where we cover off on what happened in May and also the first few days of June. And as you can see over the last week or so, markets have been pretty range bound, and maybe market commentators, but also CEOs, especially in the US, not really sure where to put themselves. A lot of uncertainty around, and even the bond market has been fairly stable despite the fairly deficit heavy big beautiful bill. But if we look at what's happened quarter to date, first of all, we've had April, where obviously there was the sell down around Liberation Day, and then we had a bit of a capitulation by the administration and also by markets. But the interesting thing is, when you look at May, markets have kept going. Now, even though they're only at their sort of beginning of the year levels, that's fairly near to their all-time highs, and it also means that the Nasdaq is up 10% so far in May. And also most markets up sort of 4 to 6%, including Australia, global small caps, emerging markets, and gold up 2%. But what's really interesting is when you look at what the drivers have been and the concentration within the US market. You look at these names here, and Nvidia, Microsoft, Meta, so on. Basically the Mag 7, and that seems to be the trend in markets. And we've spoken a few weeks ago about how it was the retail investor that seemed to be leading the way, buying on the dip, and then it was the hedge funds, the institutions that seemed to have followed suit. Now, if you see the last week, we've seen the extent of buying and where they're positioned. This is for hedge funds via the prime brokers who tend to lend money to these hedge funds and know where they're invested, and also this chart here showing institutional positioning and buying. And basically what it's showing is that you've had an enormous amount of buying culminating in the last week, and basically the question is, have they got back to level pegging now, and have markets gone from being sort of oversold, maybe overbought, but at least maybe there's a thought that a lot of these institutions have got back to where they were. The other thing that's dominating markets, or basically blown up the internet, is the so-called taco trade. Trump always chickens out, coined by this columnist here for the FT in a podcast, Rob Armstrong, quite a funny guy. Look it up, Unhedged FT. The latest podcast, particularly funny because there's a sense in markets, it's been talked about a lot, that they talk about themselves, that unfortunately they might have poked the bear. So there's another guy that we follow, calls himself Le Shrub. He's come up with another acronym, which is burrito: backs up rapidly, regrets it, then overreacts. And what he's alluding to is that Trump was challenged in a press conference last week about the so-called taco trade. He didn't take to it kindly, and there is a sense that he's actually going to double down just to prove maybe that he's tough. So obviously not very fundamental, but it does seem to be the kind of things that's moving markets at the moment. So in terms of what we're working on, trying to put a more fundamental lens on this, and we have a conversation this week with Tassos Tassopoulos of Trinetra, and it's quite an interesting one, where basically I think the punchline is that emerging markets, and especially the kind of stocks that he invests in, basically domestic consumer orientated, actually look quite resilient. So when we put to him our various scenarios around tariffs, which we think are important because we don't really know where things are going to land, he's actually not that concerned about it because a lot of these markets seem somewhat tariff resilient, and they're more contingent on what's going on in their local economies, especially China, but also Latin America. The valuations, even though a lot of these stocks have risen a lot this year, the valuations still seem fair and the growth prospects still seem to be there. But importantly, there's less concentration as well. There's more return drivers. That's also something that we're seeing in global small caps ex-US. And meanwhile, in Australia, we're also seeing a similar degree of polarization. So in the quarter to date, similar dynamics with things like CBA, Wesfarmers dominating the returns of the index. So next week we'll also be showing some analysis that we've done about valuations and what the forward-looking returns under different scenarios mean for these stocks. And again, we're looking for resilience and trying to find areas where there's multiple ways to win, and maybe being a little bit careful about that polarization that seems to be creeping back into markets. So more about that next week. Look forward to talking then. Thank you.